Hello, I'm Abdul Fattah Munir. In this session of my QuickBook training video, I would illustrate on how to use QuickBooks for savings and lending company. As you can see over here, AFM Savings and Lending Company. So, number one, if you receive deposit from customers and they withdraw back to pay them, the payment date or on request. Number two, if you lend money to customers for loan purposes. Number three, your administrative business, of course, your transacting people receive loan from a financial institution, whichever method you want to make use of. The first thing is we need to adjust and we need to make sure we adjust this QuickBook, customize it to fit in for a saving and lending company. So the first thing we do is, for me, I'll create maybe two or three accounts. The first account is for definitely my own personal investment account where I put the money I invested into the business. Then my regular account. The second one should be for tracking of deposits I receive from customer and the payment I make to them on request. The third one should be for loan I dish out to customers, and definitely I will receive payment on those loan, maybe with interest, of course. Then the third one might also be that I am receiving loan from a financial institution. So first thing first, let's go to list here. Then we'll go to chart of account. So I want to create this bank. I can create. Okay, I think I have one bank here now. I have a loan to customers. So let me just right click and new and show you how I did that. Okay, so the next one is bank. I'll select the category bank, then continue. So I already have loan to customer. So you can have your bank as whichever bank name you use actually for your business. And if it is one bank you want to use, fine. So now let me create one bank. Let me say Premium Trust Bank. Let me use Premium Trust Bank for my own personal investment. Then save and new. Let me use this as customer deposit. Customer deposit. Deposit. Okay. Then let me use another one. This name already exists. Okay, let me check. Go to list, chart of account. Do we have customer deposits? I think we have. Okay, we have customer deposit as other current liability. So I'll go back to open Windows, then add new. So I'll just add this as bank. Okay, bank. Now I'll go ahead and save and close. I think I have the banks I need. So I needed a bank to track customer deposit, bank to track the loan I give to customer, and my own regular bank where I invest or receive loan from. Okay, two. Now the next thing we need to do now is to receive or to create an investment. Okay, so I'll go to company. I want to introduce money. So let me say 5 million from my own end. So I have this as 001, and then I'll select. I think with going to report here, company and financial balance sheet. Do we have? We have nothing. Okay, so I'll go to general journal. So now I want to deposit to my Premium Trust Bank 5 million for the sake of this business, right? There can be owner's contribution. You can name it owner's contribution. Okay. I have this copy. Down here. So this time around, I'm going to select an owner equity. I'll go to equity account as owner's contribution. So I have this selected and it should be to my own. Now I need to create a class. I want to create class so that I can track the transaction based on the customer deposit, the money I lend to customer, and the loan I give to customer, then my own admin. So I'll go to list here, go to item list, I'll right click anywhere, then new. So here let me have this as, I'll go to list, class list. I'm supposed to go to class list. So I'll right click anywhere, new. Then here let me create customer deposit so I can track the income and expenses as regards this. Okay, customer deposit. Next, We have a loan to customer, loan to customer. Okay, now next we have loan to customer, right? Next, let me see the list we have so far. I think we should have admin. Admin. Okay, so I have these three classes that I want to track the transaction based on these three classes. Okay, so now I can select, I'll go ahead and select the class now as admin. This is an owner's contribution, right? So I'll have it as admin. Okay, now save and close. Now we'll go to balance sheet, save anyway. From balance sheet here, we'll see that we have 5 million in our premium trust bank as a result of our owner's contribution. So let's go ahead and receive a deposit from a customer. Okay, how do we go about that? Let's go to sales. We're going to create sales receipt. So we'll have to create sales receipt for this purpose. Okay, now from sales receipt, I'm going to select. Now we are receiving deposits. Okay, so I don't think it's a good idea to go with customer, so I'll go with vendor. So let me go to vendor center. I think I have some vendor. Okay, I have Abdurrashid and John. So let me see, we are receiving deposit from Abdurrashid and John. Okay, so how do I go about that? I'll go home here, then I'll click on bill. This way it will reflect that we are owing Abdurrashid and John the sum of the amount that is deposited by them. So Abdurrashid, then from here the date is correct, then I'll select the expense account. Now I have to select bank here. This money is going to the bank, that is customer deposit. Now how much? So we are receiving, let's say 100,000 from Abdurrashid. Okay, so I'm gonna go ahead and save a new and also receive. Okay, and select a class. So customer deposit, customer deposit. Okay, so go ahead and save a new. Then I'll receive from John. Then John also, the money is going to the bank and customer deposit. Then let's say John is 150,000. Okay, then similarly to customer deposit class, then customer deposit class. Then I'll go ahead and save and close. Now once I go to the report balance sheet here, you see now we have these transactions in the deposit 250,000. If I double click, 100 and 150 for the two vendors, the two customers, but I created them as vendors. Why am I creating them as vendor? I will tell you. Now account payable is 250. Fine. Now we'll go to report here. I want to see that when I go to report, I'll go to vendor and payable. I should be able to see the summary of who I'm owing. So from here, if I had not created this bill, I wouldn't have and created them as vendor, it won't reflect this way. So with this, I can see the list of customers I am owing, or AFM Savings and Lending Company is owing. Fine, it's okay, it's fantastic, everything is properly done. Now account payable. So with that, we are done with that. So let's go ahead and say we want to lend money to a customer, right? This time around, a customer. Now the first thing I'll have to do is that I'll go to create invoice. Okay, now from creating invoice, the bill, remember we did a bill, so it is a way, since you can customize this. Okay, let me quickly go to, let's say we want to now dish out loan to a customer. We can customize this report. You can customize that to have it as loan. So I'm going to click on formatting, manage, then let me say service, then let me do a copy. I want to work on the copy, then okay, then additional customization, then from here I want to have it as loan. So loan, then this should be loan to loan number. Okay, then this should be loan to loan to purchase order number, not really necessary. You can adjust to your taste. So I'll click on OK, and from here I will see that is a loan I want to create. So I want to give to, let's say, Aliu. I'm going to select the class. This time around is a loan, so loan to customer, and I'll go to the item. Now, do we have an item? No. So I have to create an item to link it to that bank, because definitely if we want to dish out loan, we have to give it out from the bank. So but then I don't have any money in that bank account, so I have to transfer from the one I deposited as my investment. Okay, so I'll go to transfer fund. I will select the premium trust bank where I have 5 million. The class should be for admin purpose. Then I'll transfer to loan to customer where I want to give out loan. So let me just say I go out with 2 million. Okay, then I'll save and close. Now I have money in the bank. So but then I have to link. So let me add new. Then it should be a service. Then loan to customer. Okay, loan to customer. So I will have to link it to the bank that I'm going to give out this loan from. So I'll click on OK. Now from here, let's say we are giving loan of let's say we are giving a loan of 500,000. Okay. Now your interest payable or interest receivable will come in as at when due, right? As at when due. Okay. So for now, we can just leave this like this as it is, and go ahead and save and close. Then let me go ahead and save and close. Now from this, when I go to my balance sheet, I should be able to see that we have an additional information. We have 3 million because of the transfer we made. You can double click that quickly to see what that 3 million is meant for. 5 million was there before, then 2 million to loan to customer account. Then the next one here is the loan that we give to customer account, which was 2 million, but we've given 500 to Liu. Okay, everything is recorded properly. Then this customer deposit is the deposit we receive from Abdurrashid and John, which is also reflecting here as account payable, which we've seen in the vendor center for Abdurrashid, and which we saw in, let's say, report, account, vendor and payable, vendor balance summary. So here we can see now we have it as 250, right? Then we know that we are owing this person. Okay, let's go back to balance sheet. Now another one we should have account receivable 500,000, or we can simply go to customer and receivables and go to customer balance summary. You see we have 500,000 from Aliu. Now these are done properly. So let's now say from this deposit we receive, there's an income we are supposed to receive. Of course, we are not just receiving deposit and giving out, right? So now the next thing we go to is go to company. Then we go to make general journal entries. Then from here, I want to have this as 001. Then from here, on that deposit I receive from Aliu, right? I want to have an income. I want to have an income. I should have an income on that deposit. Okay? Now, the only way we can do that now is by the time we have to pay Aliu. Okay, let's say we want to pay Aliu, go back home. Then we'll go to pay bills because of the okay these are the people we are supposed to pay, because these are the money we have as a deposit, which is a liability, right? So we want to go ahead and pay this customer their money. Okay, initially I wanted to go with deposit, the one that gives us, I think we gave Aliu the loan. Okay, let me go to vendor balance summary. Let's see who we are treating. Okay, the vendor here is 100,000 and 150. These are the people who receive the deposit from, right? Okay, so those are the people we want to pay now. So we receive deposit from these people, we definitely need to pay them back their money. Okay, so I'll click on this and this. Over here, I can select that, okay, since this payment is based on an amount, I'm going to only pay, let's say 90,000. So 10,000 is my own gain. That is a huge amount of money, right? So the next thing I can do here is I can either, first of all, create, let me just go ahead and give that 90,000, or so that we don't get it confused, let's create a credit. I'm going to create a credit. Okay, now how do you go about that? So now, in order for us not to be able to pay everything at once to this customer, because we need to bring out our own money. Okay, so let me just go ahead, let's go to pay bills, and I'll select this and this. Okay, then set credit discount. Okay, now from the discount here, is either we have it as credit or discount, right? So let's just use discount or credits. These two will reduce the amount you are supposed to pay. And if I want to make use of credit, it means we make payment to their account. So we make payment to this body without receiving any service. You understand? That is how it will go. But we're not actually making payments, so we want to have it as a discount. So we remember we are customizing QuickBooks for this purpose. So amount of discount, discount account. Let me see. Now the class should be customer deposit, right? So discount account, I'll have to select an income account. So I'll add new. So I have to create an income account. They will call it interest income, right? Interest received or income. So from having this interest income, I'll go ahead and hit save and close. Then from here, let's say at the point of receiving this amount, we are to charge. Remember, we are with John. Okay, so it's 10%. So 15,000. Then click on done. Then I'll select this Abdurrashid also. I'll set the credit or discount. Then I'll select that for customer deposits, interest income, 10%, which should be 10,000. Now I have this as 10,000. Okay, then I'll go ahead and click on done. Now you see we are left with 90,000 and 135,000. Why? Because of our own profit and gain we want to make from these guys. So you can set these things this way and make payments for the remaining balance. So let's say we want to pay back this balance. Then we'll go ahead and you see we have an ending balance of 25,000 from this transaction. So but the beautiful thing is, even though I cancel now, even if I cancel, I'll go to report, then I'll go to company and financial or vendor payable. You will see now that when we go to vendor balance summary, it's no longer going to show us, okay, showing us 100,000 and 50 because we've not applied that amount. Okay, it's still showing us 150. So let's go back to making payment. Then pay bill. Now from pay bill, select this and select this. Okay, now the discounts. Okay, then now we have it this way. So we'll go to enter bill. Then we'll make an adjustment from the bill. These terms here, we need to select the term and add new. So from here, we can actually, in 0 days, so discount percentage is 10%. you can have it this way: 10% discount if paid within 0 days. Okay, and no due date, net due date 0, because depend on when the customer wants to receive their money. So when I click on OK, so I'll have this as 10%. So this is the due, this is just the percentage that we'll have as a discount, right? Now with this, I'll go back to John. I'll select that 10%, right? I'll select that 10%. Now I'll click on the next one. So that was the adjustment we're supposed to make. Yeah, go ahead. Then for Adashi, we'll go to 10%. Okay, then we'll hit save and close. Now once we are done saving and closing, we should now see from this end that we can apply the discount on this transaction. Okay, so now we want to pay this person. Let's go back to report. Then we'll go to vendor payable, vendor balance summary. So we can still see that we are having 100,000 and 150,000. Now since we did not set this to automatic, it won't apply to this transaction. But once you click on Abdulrashid, you can see there is a 10,000 discount. Once you click on John, you see there is a 15,000 discount because of the 10% that we actually. But if you want to have it set so that it will apply immediately, you can do that here in Edit, in Preferences. Then let's go to Payment. Okay, let's go to, I think we should be around so it's in bill, so automatically use credit or automatically use discount. So we want to take this discount to an income account, which is interest income account. So remember, we are designing this, we are customizing this QuickBook to fit in for a loan company. Okay, so once I go ahead and click on OK, I think it will close the remaining. Okay, since we've not set that before coming here, let's go back again and pay bill, and we can now select this. So automatically it has applied. We now have 90,000 and 135,000. Good. So with this, I can go ahead. You can see now we are having 25,000 in the customer deposit account and pay selected persons on their day of withdrawal. Okay, no class to that discount. So I'll assign a class to discount. Okay, let me see. I'll go back to the bill. Let me go back to the bill, go home, then go to enter bill. Let's see which of them is not selected. This one is selected for John. This is also selected for Abdurrashid, because I want to have them in class so that I can track my class. Then in this case, do we have a class here? Okay, I think we can just go ahead. Okay, I think it should be here. Discount loan, no customer deposit. Okay, done. Then for Abdurrashid, the discount is loan customer deposit. Okay, I think this is where we need to make the adjustment. So pay selected, bills. Now we are done with this. Done. So let's go to balance sheet and see what we have in balance sheet. Now from here, you see now that there is nothing. We still have a customer deposit of 25,000. That is the income we earn from these two deposits, the 100 and the 150, which we paid 90 and 135. Okay, now once you've done that, once the discount is set, you can transfer these monies. But since it is in the bank, you can transfer from this bank to an account where you track your income from interest charges. Maybe a bank, you can have a specific bank where you track what you've made, but you can decide to leave it there. But if you want to do that, you go to company, go to make general journals. Then from make general journals, you select the bank that we have, loan, customer deposit. Then let's say we have this, the 25,000. Oh, we want to get it out of that bank. So let's say we take it to Premium Trust Bank, right? Then we have 25,000. Okay. Then from here, I want to get it out from the customer deposit, which is also 25,000. You can decide to add a description for this. So save and close. Oh, I need the, this is an admin stuff, so I'm going to select that. So save and close. So I'll save anyway. Yes. Now with the refresh here, we can see now that this 25,000 has been included to the Premium Trust Bank, where we'll track, where we'll take our proceed to. But now the owner's contribution is still 5,000, right? The loan to customer, once double click on this, we give 1 million, and we'll give, this is 2 million, and we'll give 500,000 to Aliu. This is the loan aspect. Now as a result of this, we don't have, let's go to report and go to account, customer and receivables. So we'll go to customer balance summary. From here we are owing Aliu 500,000. Okay, 500,000. Oh, sorry, we are not owing Aliu. Customer balance. This is the customer. This is who we gave the loan to, right? Okay, I was supposed to go to account payable. My bad. Then vendors and payable. So let's see if we still have those guys hanging out. Now, fantastic. We don't have those amounts here again. So we've successfully, what we've done now, we're able to receive deposit from customer. We're able to charge that money from the customer and also pay the customer on the date of withdrawal. So we'll go to report now. I'll go to profit and loss by class. Now profit and loss by class, we'll be able to see now that from the customer deposit so far, we've made an interest income of 25,000. Of course, there will be operational expenses. You might pay for fuel. That you can check my YouTube channel for how to create expenses. Okay, but the bottom line is we've gotten 25,000 from this transaction, and we're able to classify the transaction based on the classes as customer deposit. Next, let's go to sorry to take a little longer, but I think we are going to the last place now. So let's say we are back to the we're going home. For those we've given loan, so let's say it is 1 month now, and we want to actually receive this payment from this customer. Definitely it's not going to pay us instantly. So let's go to customer payable, customer balance summary. So it's not going to pay us this 500,000. It's going to pay us an addition on this amount. So it's going to pay us with interest of 10%. So let's say that interest is 50,000. So that 50,000 will be divided by 12 to give us a monthly amount. So you can just do your computation that way. So let me assume we are having 10% or 12%, but the monthly interest receivable is going to be around 5,000. Okay. So now from here, what we need to do now is before receiving back this at the end of the month, we've calculated the monthly the instrumental payment in addition to the interest charge on this. So but we want to actually get and want to be able to charge this interest because it is up to a month. So the 1 month interest to be charged on this account, let's say is 5,000, right? Just like we said initially. So now I'll go to invoice. Then from invoice here, I'm still going to select Mr. Aliu because this is the end of the month. Okay, so I'll select the class loan to customer. Then I'll select the item here. So I have loan to customer here, but I have to add new. So this time around, I will still name it. I can name it order charge or service, depending on how I want to have it. Okay. Then this should be interest on loan to customer. I just want to be specific, more specific. So I'm going to select this account here. It should go to interest income. interest income. Now once I'm done with this, I have earned this amount on this particular transaction for this month. So now the percentage, I can have it as I can just leave it blank and include the amount later. Okay, so let's say the amount is 5,000. Okay, so now we are charging it to Aliu. So but this is where we are getting our income from, right? So I'll go ahead and save and close. I think we've selected the class, then save and close. Now once we've saved this, we will see now that it has added to 505,000 on Aliu. But then let's go to reports and see our profit and loss by class. Okay, now you see we've gotten an additional interest on loan given to the customer of 5,000. We've earned this amount, but this money is not yet in the bank, right? Why? Because we've not received any payment so far. Okay, we only have 25,000 that was transferred from the deposit. The gain, the proceed we got from the deposit. We have an additional 5,000 attached to this. So now, how do we go back to receive this payment? So we'll go back home here. Then we'll click, since it is an invoice we created, we'll go to receive payment. So once we are receiving the payment, we'll be able to select the bank we are receiving the payment to. So receive from who? From Mr. Aliu. So at the end of the day, I'm going to deposit this amount to the loan to customer. The loan to customer. Okay, I'll select that bank. Now I will select Aliu. So since it is 505,000, so if he is paying now, let's say he's paying a portion of the principal and the interest, so I'll just select the both. Once I select the both, I'll make the adjustment based on my computation. From here I can say this is, for now, let's say 500 divided by 12. Let me have my calculator. Okay, from the calculator, let's say 500,000 divided by 12. We have it is as 4166. Okay, let me just have that first. 416666. Okay, 416. Then let's check about for 5,000, right? So for the 5,000, we have 5,000 divided by 12. So let's say the total amount is 416. Okay, this is also 416 or 417. So let's just have it 417, and here also 41667. So let's say this is the amount. Oh, sorry, the other way around. So we have 4166. What is calculator again? Calculator. I can actually do the calculation from here. Okay, so I'm gonna have it as 416667, then plus 417, then minus 500 and 5,000. So let's say 87,916. Okay, 87,916. So with the computation, you can just do your division, this divided by a percentage of this from 505 times this amount, and a percentage of this from 505 times this amount. So I don't want to bore with that calculation. Let me just go ahead and put, let me just insert the difference between this 500 and this amount here is so let me just say equal to minus 500. Okay, so let's just say 83. So I'll remove this minus. So here I can just do equal to 5 minus 5,000, right? So I'll just have this as let me just say 583. Let's just have this. It's a rough calculation. I don't actually have it down. Okay, now we have this as 83,916. Then the underpayment is 421. For this first month, this is the amount we are receiving from this person. So we'll go ahead and save and close. So once we've saved and close, we'll go to customer balance. Okay, yeah. Now it is no longer 505, it's 421. Let's go to balance sheet and see which bank will receive that money to. The bank will receive the money to is the loan to customer account. Let me click on that. You'll see the 83916. Okay, here. Then if you don't want it to go to this account directly, you can decide to, because definitely you should go to the account, right? Then at the end of the day, once you have, at the end of the payment, you have your gain, you have the profit from this, you can now do the transfer from loan to customer account to your premium trust account. So with this, I've taken a lot of our time, of course, but with this, we're able to now see how we can, similarly, if you take a loan from a bank, you can also do that and also compute your interest payable so that you pay once due. So with this, I believe we're able to see, at least not in all, at least we're able to see how to do this, carry out this transaction based on a savings and lending company. If you have any question, please drop it in the comment section. Like my video, share my video, subscribe to my YouTube channel, and click on notification so that again, if I whenever I make new videos. See you guys in the next class. Have a wonderful day and bye.